All right, so some clients are wondering about how does renting out a basement work? So let's say you got a home and you turn the basement into a nice little spot for with a kitchen in it, and there's a couple bedrooms or one or whatever it might be. You're thinking about renting it out. Well, first off, guys, there's major implications when you decide to rent your home out. If you once you rent it out and once you depreciate your property, which we're going to do for you if you rent your property out, you're going to now have to pay capital gains on the property when you sell it. So that means if the property is appreciated by $100,000, normally it's your personal home, so you're not going to have to pay capital gains on that if you've lived in it 2 out of the last 5 years. Um, so definitely take that into consideration. If you know you're going to live there for 10 years, well, then renting it out is, in my opinion, a good idea. If you're going to live there for another 6 months and then sell it, then it's not a good idea. If you're gonna live there for another 6 months and then rent out the other half, then it's a great idea. So just think about those things. But what you're gonna do, I guess they're asking, how does renting it out work? So if I were gonna rent mine out, I'd get it ready to be rented out, and then I would go talk to a property management company. I'd tell them I want to rent out my basement. I'd tell them how much I want to get for it. They'd ask me for all my information and for my bank account information, all that stuff. So then they would fill the property with tenants, and then they would collect the money from the tenants, and I would see money come into my bank account each month, and hopefully they would also give me a P&L each month if they're doing any bookkeeping for the property. If I don't want to pay, a property management company is going to charge you anywhere from 8 to 10%, depending on the type of property and where it is, and just the company's practice. So what I would do is look for a good price. You know, obviously 8% is better than 10, but I personally have a property manager for every single property, no matter what. I'm not going to spend my time looking for tenants, filling the space, answering their calls when they have questions or when there's a concern with the plumbing. I'm not going to be the guy calling and getting a plumber. That's what the property management company will do for you. But if you don't want to pay those fees, then obviously you have that choice. So you could go ahead and find a renter, get a renter in there. You're gonna have to collect. You're gonna have to have a lease agreement. So I would probably get on Rocket Lawyer or any of those sites, and I would find a lease agreement template, and then I would make the template right for my situation. So I'd change all the names, I'd change all the pricing until it was right on with what I wanted. Then I'd give it to the person that's going to rent out the place, and I'd have them sign it and put down their deposit. You know, I would create a separate business for that rental. That's a must. If one of your tenants breaks their legs in your property because they fall through the floor, even if they were the ones that got a sledgehammer and broke the floor and purposely broke their own legs, they're going to be able to sue you for everything in that home and probably all of your personal income and everything else. So you don't want that to happen. So you start a new LLC for it. Doesn't mean you have to do quarterlies for that company and all this other stuff and file a completely separate tax return. You don't, unless it's a partnership. You would have to. But if it's just you doing it on your own, you create that LLC. We do those for you. So we'll create the LLC. Then you're going to take the LLC paperwork to the title company. You're going to ask them to transfer the title from your name and the bank's name into the LLC. So now it's in the LLC. You're good to go in case you get a lawsuit. But then you're also going to take those LLC docs to the bank. You're going to set up a business bank account. Now, whenever you have revenue or expenses for that property, so anytime your tenant pays you money, you're going to have them write the check to the LLC so that the money goes into that business bank account. And then anytime you have expenses related to that property, you're going to use that business bank account's debit card, or better yet, a cashback credit card if you got one, that's for the business and in the business's name. So yeah, at that point, you're pretty much set. You've got the business bank account, you've got your liability covered, you've got revenues coming in, and you've got expenses coming out of that bank account. Now, obviously, you're going to have to be on call for the tenant. Anytime, maybe you tell them, hey, text me if you have an issue, because I can't take calls. But then they'll text you, hey, our electricity's out down here, or the stove stopped working, or the toilet's clogged. All those things, those are your responsibilities now. So make sure that you're available. And if you're not available, get the property management company. But then on the tax side of things, guys, what's going to happen is at the end of or during tax season on your tax packet, you're going to, where it asks you, do you have a rental property? You're going to click the button, yes, I do. And then it's going to ask you for revenue. So you got to put in the total amount you were paid for the rental that year. Then it's going to ask you for expenses. It's going to ask you for your 1098 mortgage statement for that property, because we're going to take whatever percentage of the property is being rented out, we're going to depreciate that. So, yeah. And then we're also going to take a bunch of as many expenses as we can that are ordinary and necessary for you to have that rental. And that way there's going to be, there's almost always no tax on your rental income. The reason for that is that we get to depreciate the property. It normally creates a significant, $3,000 to $10,000 loss on your taxes. Now, just remember that it's a passive loss, so you only get to take $3,000 of that loss against your ordinary income. But the beauty of rental properties, guys, is that you might make 10 grand of revenue on the property, and after expenses, you're at 5,000 in profit. Like that, you're actually seeing. You're seeing 5,000 that you get to go spend on what you want or invest however you like. The beauty of it is you're not paying any taxes on that $5,000 in profit, and it's actually helping you $3,000 against your ordinary income to take that loss. So pretty awesome rental properties, guys. It's amazing. Make sure that you, if you really want to do rental properties and you really want to do it fast, and you want to synergize everything in your life to make it so you can do 10 times what the other guys are doing, take a look at my coaching video. Consider coaching with me. It's awesome. Everybody that does it loves it. So I'd love to help you out. But hope that answered your questions. And yeah, keep on hitting us with more. We're going to make videos for every single question that we get, and hope that they help. Thank you.